There have been ongoing health concerns amid the coronavirus outbreak, but that's not the only field the virus is affecting. Bitcoin is making a big comeback because of it. Joining me to talk about this is Tim Curry, co-founder of the local blockchain BTM, which operates Bitcoin ATMs in our area. Tim, thanks for joining us.
Hi, how are we doing?
Great. So a little hard to sort of imagine what this is all about. So Bitcoin is having one of the best starts of a year it's had in nearly a decade. How is that connected to the coronavirus?
Well, when any uncertainty and fears come into the market, people tend to put their assets in safe havens like gold and things like that. But we're seeing more and more that people are participating in the Bitcoin economy and putting money into Bitcoin and cryptocurrencies. And that's what I would describe more as a risk haven.
So one of the reasons being the coronavirus outbreak, which is based in China, China being an economic giant, this is having an impact on the markets. How else is it doing that, and how does that connect back to Bitcoin?
Well, both China and the U.S. have been printing an incredible amount of money. We've seen the stock market in China decrease by about 8%, despite the government urging its people that everything is fine. The virus will pass, everything will get back to normal. Don't take money out of the market. And typically, when governments have historically told their citizens not to take money out of the market, that's so that they could be the first to take money out of the market, and then the citizens end up losing money. So Bitcoin is an interesting asset because it's a non-correlated asset. So in other words, it doesn't behave like the stock markets and things like that, and it doesn't necessarily have this. It's not affected by those things in the same ways that that many correlated assets would be. So putting a little bit of one's savings or assets into that class is something that balances portfolio and gives it a hedge against some of that risk.
So what you're saying is when traditional markets are affected by things like disease or political unrest, Bitcoin tends to do well.
Yeah, it does. And there's some other factors that are playing into that right now. We have what's called a halving coming up, and that is an increase in scarcity for the Bitcoin that will be going into circulation. And Bitcoin halves every 4 years. We have one coming up at the end of April, beginning of May. So the amount of Bitcoin that's coming into circulation will literally be cut in half. So that increases the scarcity. We're seeing that more participants are holding Bitcoin for longer. So the supply that is available right now, people are tending to hold. And of the 21 million Bitcoins that will ever be circulated, about 85% of them are already in circulation. So that's very interesting as well.
So that scarcity is coinciding with all these other factors, including the coronavirus.
Right. And remember that Bitcoin is a technology. It's not a stagnant asset class. It's something that's continuing to be built on. One example of something that makes Bitcoin quite different is last month there was 51,511 Bitcoin sent in a single transaction, which was about a $450 million transaction. That was sent across the world or from wallet to wallet for a fee of 23 cents. That would be something that would be impossible to do with traditional money. Certainly with gold, even with cash, it would be exorbitantly expensive.
So, okay, Bitcoin had a good January 2020. I know it's hard to predict the future of these markets, but what does the near future at least look like for Bitcoin?
I mean, it's going to be an interesting ride. There's going to be fear of missing out, and then there's going to be another bubble, certainly. And so it's something that it would be irresponsible not to have a small portion of your portfolio into Bitcoin and maybe some top performing crypto assets, but it's certainly the most volatile of all asset classes that ever existed. But again, it's of the last 11 years, it's been the best performing asset in 6 of those 11 years.